So that'll be next week. That'll be the last chapter we covered here. Okay, so let's go to the audit. The DEFTA Furniture Company. Oh, it is. It somewhat folded to me. Okay, I'm gonna cover a little bit up here, and then I just want to jump down and look at kind of the documentation that you'd have for something like this. Okay, it's a family-owned furniture company. It produces various kinds of wooden household. It has an excellent reputation for producing quality products. The company has 3 major product lines: bedroom, dining room. Okay, I'm going to stop right here. I want to go down to the documentation, which I think is on page 12. Nope, 11. And I want to go down to this because this is actually shows how you determine whether you know when you get a client, and how you determine whether you're going to keep auditing that client. And this is some of the information that you'll get for it. Okay, and what you're doing is you're kind of going through the risks. What are the risks, and is it risky? Do the risks outweigh what we would get out of doing an audit, which would be the audit fees? So that's kind of what you're doing here. So documentation, and again, that's very important. You're going to document everything. And even continuing with a client that maybe you may have had this client for 20 years, you still have to document whether you're going to continue with them or not and why. Okay, their financial statements will be prepared using international standards. That's fine. You'd expect that. I believe this is, they're in India, I think, aren't they? I think this is in India. Oh well. Excuse me. And so they have the engagement letter has been signed by the management, and we'll look at the engagement letter. And the engagement letter says you have to make all your information available to us. We have to have unlimited access to your personnel. We can talk to anybody. And we have the right to mess up your spacing if you see here. You must design and implement your internal controls, determine whether necessary to enable the preparation of the financial statements. And again, they focus on the financial statements preparation, not necessarily all internal controls, but the internal controls or the financial statements. Free of material misstatement. Again, we're only looking for material misstatements, whether due to fraud or error. Have the acceptance continuing requirements for the firm's quality control manual been followed? They say yes. Any change in terms of reference? No. Any independence issues? Okay, so this is independence issues are for who? We talking about? I don't think we talked about it in this class. Have we? No, we did talk about it. Last time we talked about it. What are the independence issues? They are a little bit different for the U.S. standards and international standards. But when we talk about independence issues, can we do the audit? What are we talking about? Oh, come on. Are you guys sleeping already? I'm not supposed to do this till like 7. When my voice just starts droning on and on.
Did it have anything to do with like the financial interest in a client that you
Yeah,
had? Okay.
exactly. Yeah. Yeah. Financial interests. Business relationships. Does anyone work for them? Do you have family members working for them, or have businesses on the side with them, or anything like that? So, are you independent? And they said, okay, there's only one matter that was noted. One of our staff bought a lot of bedroom furniture from, I think when they say lot, I don't think they mean, I think they mean they bought bedroom set, I would guess. I don't know why they buy a lot of furniture, but um, bedroom furniture from Delta. He paid catalog price. Okay, so that's an arm's length transaction. It wasn't like they got a big discount from it or anything like that. This incident is not considered a threat to our independence. Okay, so you document those things. Was there any dealings? Yeah, there was, but it was, they paid the full price, and it was just a matter of getting bedroom furniture, probably. Any circumstances that would cast doubt on the integrity of the client's owners. Convictions, regulatory proceedings, illegal acts or fraud, police investigations, any negative publicity. No. However, Pavin, daughter of the client's business advisor, received some negative publicity in July. She was an advisor in a land deal where government officials were accused of receiving bribes from developers. This matter has been noted in our listing of risk factors for the audit. Okay, so this is one of those things you look at. Is it, how bad is it? And, does it preclude from us doing it? And I'm going to make just a statement here in that it's really hard to find a perfect client. And that is that, you almost always find something, that, okay, they had a run in with the IRS over this or that or whatever. They were sued for this, they had to pay out for this or whatever. Being in business, that's just part of it. So I mean, not making excuses, but at the same time, it's very difficult to find someone who hasn't had a scrape with somebody else, or been accused of something, whether true or not. And so, you got to be a little bit careful on that. If you get too picky, you're not going to have any clients. So, again, this is the daughter of, I think, the daughter of the client's business advisor. Okay. So she was an advisor in a land deal that people accuse government officials of getting bribes for. Okay. Are there areas of specialized knowledge? We will use David, who's knowledgeable in the IT area, to review controls over the internet sales. It's very common to use for computer stuff to have a specialist come in. And that's true not only for uh, this audit, but even large audits and all that too. The way audits are done, larger audits are especially use the IT people. The IT people kind of are separate. They have a separate kind of group, and they usually come in and they will do the controls over the computer systems. We, as auditors of the accounting side, generally don't do that. They will go through and test the systems, and there's different ways of testing a system. You generally don't go digging into the code, to find the one code that's bad or anything like that. What they usually do is run a bunch of information into the accounting system and then see what comes out the other end. And they know what it should be. They run the information through. They know it should come out looking like, the standard form of what it should look like when it comes out the other side. And they'll have all kinds of crazy transactions in there. They'll have negative inventory. They'll have all those kind of other stuff in there, and see what happens. And where there's a problem, that's where that's what they'll concentrate, but they'll also let the auditors know, say, by the way, it doesn't handle returns very well. Some of the returns are not handled correctly or whatever it is. So anyway, the IT people come in and they're usually completely separate from the from us, us auditors, and that they will be testing the system. And again, they don't go through code by code and all that kind of stuff. What they do is they put data through, know what it should be coming out the other side, and that will tell them whether it's is being processed correctly or not. And if it isn't, where the problems are. Do we have the capacity and time to do it? Yes, see the planned budget. So you'll also see, do you have the ability to do do the audit in the timely manner that is needed? Is there any issues? Need to review the general IT controls in light of decision to accept sales over the internet. Okay, so internet sales, and I assume that's why we're using, got his name already. We're using David for that. So David will be the one we'll be looking for to see what that is. Is there any new circumstances that increase? No, management has a good attitude for over internal control. Can the client continue to pay our fees? Yes. Conclusion, the overall assessment of our engagement is low. By the way, you might be wondering about this, well, that's kind of a uh, uh, snarky thing to say. Can you pay our fees? But it's important because this is part of the independence thing too. If you didn't take an auditing class yet, this it might be something kind of new. But unpaid audit fees mean that you are not independent. If you have unpaid audit fees, it means that basically you're loaning money to the client, and that gives you an interest in the client continuing. So unpaid audit fees, well, it sounds kind of, I don't know, whatever. It actually is an important question, because if they can't pay it, it's very likely that you may not be independent if they can't pay your fees. So that is why that is in there. You'll have a vested interest in giving the client a good audit report. Documentation, the audit engagement letter. And this audit engagement letter, this is something that it's sort of like a contract. And we kind of sit down and tell them, this is what to expect. Here's what our responsibilities are. And we go through their responsibilities. Here's your responsibility. You must give us access and the financial statements and blah, blah, blah. And this is, all it's kind of boilerplate stuff, but it's important. And one of the things is that, for instance, access to all information. And they may not want you to see certain things. They say, well, I don't want you looking at our blah, blah, blah. Well, you have to tell them, look, we can't, and especially when someone doesn't want you to look at something, that's the first thing you want to look at, right? I mean, I always use the case of, if they're investigating a murder and they come to my house and I say, yeah, you can look at everything you want, but don't look in this closet. Well, the first place you want to look is in that closet. So if they are not wanting you to see something, that also raises a red flag. Like, well, now I really want to see it because you don't want me to see it. So anyway, it's important to let them know, look, we got to look at everything. You can't be hiding stuff from us. And sometimes, you ask for like the bank reports and stuff like that. Well, no, I don't want you looking at my bank reports. I don't want you looking at my tax returns. Oh, we have to, we don't know if your taxes, the tax expense you have is correct unless we see your tax return. There's things like that you have to clear up sometimes with a client. If it's a repeating client, that's probably not too much of a issue. But sometimes you never know what. Well, people have different ideas about what audits are. And we talk about the fees, and then I think that's it, right? Nope. Oh, this is important. Documentation, materiality assessment. So this is all part of the risks. The materiality used in the last period was 8,000 euros. And see work papers for possible materiality amounts. Management bonus of 70,000 euros. Blah, blah, blah. For this period, okay, we plan on using, so you're going to come right out and say what you're going to be using for it. And I think this company is growing a little bit. So as a company grows, generally, so does the materiality, right? I mean, as the company gets bigger, the numbers get bigger. As the numbers get bigger, what becomes material gets bigger. So it's not unusual to increase that if a company is growing to increase the materiality. That okay, now we're not worried about €8,000 problems. We're only worried about €10,000 problems. And using professional judgment, types of we previous audits, overall performance materiality has been set at €7,500. Okay, you may be wondering what this is. And even those of you that are taking my audit class, 330, we haven't really talked about this, so we'll talk about this now. What is performance materiality? Performance materiality is for individual accounts. So any given individual account, how much they would be allowed to be off by. So any individual account, they're saying here, usually you set it up by, different amounts for different accounts, but it could be one size fits all. Individual accounts will allow it to be off by 7,500. In total, the financial statements cannot be misstated by more than 10,000. So performance materiality has been for individual accounts. And if you're wondering why it's called performance, I believe it's called because that's when you're performing an audit on a specific account. How much can it be off by? And they can be different. Sometimes they set, for instance, sometimes they'll set cash at 0 because you can audit cash 100%. So oftentimes that's set at 0 for performance materiality. And the other ones are set at different things, accounts that are harder to verify. But 7,500 says, okay, we'll allow an account to be off by 7,500, any individual account. In total, for all financial statements, they cannot be off by more than 10,000. Specific materiality for local taxes paid has been set at €1,000. They're required to do the audit report on this amount to the local government. Oh, okay. So here's something different. They are required to audit and report this amount to the local government. Okay, so the local government says, look, if you find these financial statements, you don't have this in the United States. We don't report this to the local government. In fact, we say you can't report this to the local government. But again, I mean, it kind of makes sense that they said if you find a specific materiality for local sales taxes to be off by more than €1,000, you have to report that to the local government. 1 second here. Oh, sorry, my allergies are going crazy. Okay, so this is a difference in the U.S. standards. U.S. standards, you have a fiduciary duty to your client not to give away their any of their information is confidential. And the only time you give it away is if they get a subpoena from a court-ordered subpoena. It's the only time you give up the information. Different laws in different countries, and in India, they say, look, if you're doing an audit, if these are misstated by more than €1,000, then you have to tell us. Blah, blah, blah. The amount set for trivial misstatements is 250 euros. Other information, revenue recognition is presumed to be significant, a significant risk. So is the revenue being reported correctly? If the auditor concludes the revenue recognition is not a risk of material misstatement due to fraud, reasons for that conclusion are to be included in the audit documentation. Okay, so you have to have a reason if you're not going to continue it. So revenue recognition is presumed to be a significant risk. Okay. And that probably has to go hand in hand with this. These are sales taxes and they're based on revenue. And so probably that goes along with that the revenue recognition is presumed to be a risk. You have to audit it, you have to look at it. Whether you think it is or not, it's presumed to be a significant risk. And if you don't, you have to have a good reason for it. And my guess is it's probably just easier just to audit the thing. Okay, let's go back up. So that's all the documentation. So we document the risks and all that. And now we're kind of getting into the information from the company. And you'll get a background information. And this is true for small companies, it's true for large companies. They'll have pages of this stuff for larger companies. Okay, so they have 3 product lines. Blah, blah, blah. Tap the power of the internet. They're trying to get on the internet to make sales. And the manufacturing facility is on an acre of land adjacent to Siraj Defta's house. In addition to the west side of Sergi's home, acts as Defta furniture shop. Major decisions are often made around the dining room table, which is the first table Sirajai and his family built together. He likes the symbolism of sharing a meal and products with the family. He produces his family money for food. Okay. Industry trends. Until recently, they've been growing rapidly. However, the industry has been currently been experiencing changing times due to. I want to stop right here. Whenever you have an industry that's growing rapidly, it's dangerous. Why? Why is it dangerous? Like right now we're in, the AI. There's all these companies, jumping into AI with billions of dollars, literally jumping into AI. And that's kind of the boom industry right now. What's the problem with it? What's the problem with it when you have, kind of wild growth?
There's not many controls for it, I feel like.
Yeah, there's not any controls for it, and people who are participating in it, sometimes the rules are being made up as they go. It's hard to account for something that hasn't been around very long. How do all these companies are spending billions on these AI? How do you account for that? What do you account? What do you account for that? What do they actually have? That you got all these billions of dollars going into something, but what kind of an asset? A lot of it's into hardware, but a lot of it's into other stuff too. So it's difficult. It's risky as auditors to know what it is and to know whether the values are there. I don't know how much how much some of these are worth. You can kind of look and see what you look at what their growth is, but again, you look at the growth of people buying, say, AI, technology. There's only so many people in the world. So yeah, you may have a big growth, but if you're growing at 20%, there's no way that's sustainable. It's not, there's no way. It's not going to happen. You're going to run out of people very quickly. So, you run into these problems like that. They had a problem with that. All these companies, many of these auto companies are writing down electric vehicles. They all thought everyone's going to electric vehicles, they found out that it's not going to be that way. And now you have these companies that are writing off literally tens of billions of dollars for these electric vehicles. Everyone, they couldn't wait to get into these, they had to. They were jumping in, you know, selling off everything to jump into electric vehicles. And again, it was just not there. There was the value just wasn't there. So now they're writing, most of them are writing stuff off, writing it down significantly. Uh, so anyway, that's the whole point of it is though that it's risky. Well, it seems like, oh wow, everybody's making money doing this. There's a tremendous amount of risk involved in that. Risk of knowing what the values are, and risk of whether it's any of it, how much of it or any of it is going to pay off. Okay. Okay, so let's take a look at it. So the reason they're growing live. However, the furniture industry is currently due to declining economy due to worldwide recession. Okay. And potential customers limiting their, when you have economy go bad, people probably are not thinking about, hey, let's buy some more furniture. We'll use the old furniture for a while. Another thing, you have something that's booming, what happens? You get competition. It isn't like you do this in a vacuum. When someone sees someone making a lot of money doing something, or whatever, that they will actually try to say, hey, I want some of that money too, and try to get into it. There's pressure on prices that you have to reduce prices, and of course that reduces your profitability. And when if they reduce it far enough, you're not going to be able to make ends meet. Some furniture parts manufacturers are going out of business, thereby causing some production delays. So you start having insecurities in the business itself. Okay. First kind of accounting kind of question. What's the most serious risk to auditors? Yeah, I didn't mean to do it that color. Hold on. It's got the wrong color. Oh boy. All right. Now we got the right color. What is the most serious risk to auditors when their clients are experiencing hardships? Which one of these are we probably the most worried about? I'll tell you which one it's not. It's not A. We're not worried about our fees being paid usually. We already covered that before, that we're probably pretty sure that the fees are being paid. They may even have been paid up front. But anyway, the audit fees have not been are not a worry. Of the B, C, and D, which ones are probably the most the biggest worries for us?
Is it B? If a client's experiencing hardship, they will probably have losses in their income statement.
You're on mute.
Sorry.
There you go.
Yeah, I was just talking to myself. I didn't answer the question right, but anyway. So if they have if the clients have positive loss, if it's actually on the income statement, we're probably okay with that. If they are having losses, obviously we don't want them to have losses, and yes, it does make a company riskier. But why is it riskier if they have losses? Now, if they show it on the financial statement, we're probably okay. But what's the problem what might happen if you have a company that is maybe not as profitable as they feel like they should be, or that they maybe need to be for bank loans and things like that? What could be the problem? I mean, it certainly does increase the risk if they have losses on the income statement. But as auditors now, if they have losses and they report them on the income statement, well, again, we're not thrilled with them having losses. At least they're reporting it correctly. What might be a bigger worry? And it hits right to the core of our audit.
D.
Probably C. And that clients may feel more pressure to make profits. This is what could lead to fraud. So, maybe they feel like if they're man, if we look, we have this loss, and if we report this on our financial statements, we're not going to get the loan from the bank, or they're going to pull our loan. They're going to say, well, look, we can't cover you anymore because you're losing this money. So it isn't the fact that they have losses is, well, it's not something you want to have happen, obviously, but at the same time, the bigger one is when they have losses and they don't report them. They're not on the income statement. So if they have losses that are not on the income statement and they're creating a fraud, that's your bigger worry of all these. Now, having said that, yeah, B is not a bad one. It does. If we didn't have C, I would say, yeah, that's the one there, because more losses means it's, yeah, riskier. That's not how you spell riskier, by the way. All right. So yeah, so our biggest one, and again, the A and D are kind of our business. The least of your worries is if you're going to, not getting paid for an audit while it's bad. You're talking about probably a few $1,000s, whereas if you get sued, it could be in the millions. So you're looking more at kind of the pressures that they might be under to cook the books, basically. Okay, now, any questions on that? So, and again, that, one of the things that we always are looking for when we're doing auditing is that things are reported the way they are supposed to be. It isn't that necessarily that we're being police or anything like that, but we want to make sure that if there are losses or whatever it is, as long as it's reported on the financial statements, we're okay with it. We can sign off on the audit report saying that these are free of material misstatement. But it's when you are not sure, when there's pressure to, and the more pressure that comes out of it. And this is one reason why companies that are going bankrupt sometimes will have a hard time getting auditors, because the fraud pressure makes them riskier. And a lot of times audit firms don't want to take those. Okay. Governance. The company was started by Sarah's father, Jiwan. I think it's death, though. I'm not sure if anyone knows how to pronounce that. And if I'm screwing it up, let me know. I'll just stop saying it. That's what I'll do. Say the furniture company. That's probably a better way to say it. All right. The company does not have formal governance structure. That's very common for family-owned businesses. Who's the president, no one knows. They don't really care. This is the person running it. This is the number two person. You answer to these two people, and you're usually okay. So Diwan and Siraj prepare a business plan each period, then meet once a month with a successful businessman, Ravi Jain, to review the progress against the plan. They also pay Ravi to comment on the practicality of their new dreams and ideas and businesses, review the operating results. Okay, so it looks like Ravi Jain is, I don't know if it's Jain or Hain, is an advisor. Ravi's daughter, Parvin, was she the one that had the? Hold on, I'm gonna jump down to the end. I think was that his daughter that had the. Yeah, the daughter of the business advisor. So this must be his daughter. That's the lawyer. Must be the one that I'm talking about there. Oh, lawyer in training. Okay, so she was the one that was somehow mixed up in the land thing. Okay, so this is not necessarily this is an advisor. This is not necessarily someone who is in the company itself. But his daughter had some bad publicity or accusations. And she usually accompanies her father to meetings with Siraj and Jiwan. She offers some legal advice, but her true passion lies in marketing and promotion. It was Parva's idea that Dell Furniture should expand its boundaries and start selling products on the internet. Okay. She also pushed for the expansion outside of their local region and even to neighboring countries. Perhaps by accessing national markets, sales levels can be maintained despite the current economic downturn. Okay. So expand your market rather, to keep it going. Family-run business may have a greater audit risk due to the for which of the following? Now remember, we're reporting on the financial statements. So which one of these would probably be the biggest threat to our financial statement?
Probably C.
Yep. Yeah, related party transactions may not be fairly presented in the financial statements. And by the way, yeah, I think you'd be surprised at kind of hey, how come it's not letting me? Microsoft Word is saying no to me. Why? All right. Yeah, related party transaction may not be fairly presented in the financial statements. You'd be surprised at how many, related party transactions there are in a lot of businesses. Find all kinds of wacky stuff. You'll find, car loans to grandma for a car and, all this, it's all this stuff will be on there. Like, what's this for? Well, grandma needs a car. Oh, well, all right. You're carrying that as an asset. Well, yeah, she's paying it back. Okay. You have all these different things, a lot of these different things that you'll have, are related party transactions. They're common, but they also need to be accounted for correctly. And you're definitely going to put something like that in the footnotes, there's loans of family members or whatever it is. So related party transactions are one of those things that oftentimes you'll see in family-run businesses. This is not just unique to this company. It's very common. And as far as this other stuff is concerned, it's we don't actually sit there and say, is this family member qualified to work in the furniture industry? Family members may not be paid minimum wage. And that's probably, that's probably not our concern. And if they are, especially if they're owners, they are not, you're not required to pay them a minimum wage usually. And family members do not trust the auditors. That would be kind of a rare one. The auditors aren't out for anything other than to write an audit report. So, okay. Delphi Furniture Company has full-time staff of 15 employees. 6 of these are related to the family. Not unusual at all. Most of the members work in the production area as needed, so I imagine are making furniture stuff. During busy periods, 2 to 4 temporary workers may be employed as necessary. A few temporary workers return regularly, but because of the lack of job security, turnover is quite high. Okay, so they have temporary workers come in. As managing director, Sarah oversees all aspects of the business. Arjun Singh is in charge of sales, and he is assisted by two employee salespeople. Oh, two full-time salespeople, I'm sorry. Demir, Sarah's brother, looks after production, which include inventory. Because the family space is limited, Sarah and Demir are never too far away from the production process. They share the task of supervising the two staff members. Jawad, a cousin of Sarah, is in charge of finance and information technology, and has two staff in his group. Okay. And again, this is not that unusual. Family members doing lots of different things. Okay. When one individual oversees all transactions, which of the following audit risks increase? So one individual oversees all the transactions. And again, remember, we're reporting on the financial statements. There's one risk there that I know we haven't talked about, but I'll talk about it later. Which one are we worried about? Oh, come on. Which one are we worried about as auditors? The same thing we always worry about when we're auditors.
Risk of financial statement fraud, maybe?
Yep. That's that's what we worry about. We worry about other stuff too. Risk of familiarity. What's familiarity? Familiarity is when you are such a you get to usually it happens when you've had a client for a long period of time. You get to know each other. You start doing things. With family members and going on vacation or so. The risk of familiarity is that you become too familiar with your client, they become friends, and then you lose your objectivity. So that's what familiarity is talking about. It's when the auditors and the clients become friends. Uh, Wait a minute. Okay. Oh, no, hold on. So that's what familiarity risk is. You become too familiar with them. Yeah, yeah. Whenever you have one of the main fraud risks, a very prevalent fraud risk is when you have one person in charge. When you have and sometimes if it could be either an overbearing person or just in general, one person who has control over everything. That's when you run into problems. I mean, you run into problems because they can basically a lot of times do whatever they want. They'll tell you to, they'll tell the accountants to change this, change this on the books. We want this to show this, well, do it or you're fired, They tend to overstep, all aspects of it. So that's one of the problems is that when you have one person, a single person who is, the everybody looks to basically, you oftentimes run into problems. Whenever they have financial statements problems, fraud is often caused by the CEO or the president saying, look, we have to have 10% growth this year. We can't do it. Well, you're going to have to do it. We have to have 10%. You get that kind of a thing involved. So one person is always a dangerous thing. Okay, here's your organizational chart, and you will see these all the time when you do auditing. And every year you'll come back and you'll make sure that this chart is up to date. If someone's moved around or someone's left and someone else came in, and you'll update it. But this will go from year to year. You'll have these kind of chart. So Sarah runs the place. Arjan Singh is in sales. Jawad, finance and IT, and Damir, production. And I think I don't think Arjan isn't. He's not a family member. I don't think, is he? It doesn't say that Arjan is related. I think for this one, I don't think he is. Okay, here's the ownership. Jiwan is a principal shareholder with 50%. He has plans to start transferring shares to his son, Sarah, as long as Sarah continues to manage the company on a full-time basis and the company remains profitable as a result. Okay, so Sarah is kind of on a test basis here that, as long as you do what you're supposed to do and you're profitable, you'll get more and more interest. Sarah and his sister, Kalani, each hold 15% interest. The remaining 20% is held by a family friend, Vijay Sharma. Vijay is a wealthy investor who provides capital. Okay, well, this is somebody outside the company, right? Now, notice what this means. A wealthy investor who provides much of the capital. They give the money for the 20% interest. Vijay doesn't work at the place. His role is giving money to him to keep the place going, and he gets paid basically as an investment. Okay. So this is somebody outside the company, and where they have 20%. Kalani, daughter, is a well-known singer who travels extensively. Oh. She is not involved in the operation of the company and totally relies on her father and brother to look at her interests. Okay. In June of each period, Jiwan organizes more financial business meetings, meet in the morning, primarily, blah, blah, blah. And Sarai uses this occasion to tell staff how well the business is doing and what the plans for the future are. Okay, which of the following shareholder would be most likely to sue the auditors for an ineffective audit? Now, let's think about audits in general. Do we do audits for people who are inside the company, who know how the company is running?
No, right?
No, we generally do audits for people who are outside. People like, we have an investor here, banks, people who loan money, that sort of thing. People who are inside the company, or especially those people in management, they should already know how the company's doing. And by the way, they're the ones that make the financial statements. So you don't do an audit for people inside the company. It's the people who are not inside the company. So that when they see the financial statements, they want to know, can we believe these? Can we rely on these financial statements? That's the only reason why we're there, so that people on the outside can know or have some kind of assurance that these financial statements are reliable or reliable enough to make, they may not be perfect, but they're not going to be hopefully materially misstated. We try to make sure they're not materially misstated. Okay, so again, keeping track of these names. It's kind of like reading. I don't know if you ever read a book sometimes and they have like 15 different characters. And I always keep my wife can always keep track of them. I write them down. Who's this? Oh, that's right. Okay. That's the one who stole the train, right? Okay, so which one of these people is most likely going to sue the auditors if there's a problem with the audit? You know, who's their cast of characters? Diwan, Farad? Well, I can tell you it's not going to be Siraj because he's the one that runs the place. Siraj probably makes the financial statements. All right, so Diwan, he's the big cheese. That's an accounting term. Sarah Kalani, and she's the one who is a well-known singer and travels extensively. And then we have Vinjay. So, who is most likely going to sue us? For an ineffective audit? There actually could be a couple of them. Oh, come on, pick one. Who do you think it might be? Or one of them might be, anyways. You guys, we're gonna go on break after this. Whoever answers, you can put it in chat if you want, or you can private message me if you don't want other people looking at your answer. But if you make a guess, we can get out of here.
Which one did you say was not included? Like we can already cancel them out.
Uh, it's not this guy.
Okay.
He runs everything.
Okay.
Yeah. The answer was G1. It could be G1. None of the other ones are a bad answer, to be honest with you. G1 owns 50% of it, and it's hard to tell how involved he still is with it, or she. I think it's a he, isn't it? I'm not sure. Anyway,
Is it because he's the principal shareholder, so he would be the
yeah, but it looks like they prepare. It looks like he's probably fairly deep in it. He probably knows. They prepare the business plan each period and meet once a month with assess of those. They review the progress of the plan. But it could be, depending. He may not have all the information on the financial statements. It is possible. Actually, any one of these ones are possible. This one kind of depends a little bit on what how involved he is with the financial statements. Usually people who are inside, you don't have to worry about them. The person that is probably the most interested is the investor. All he does is, he's investor, but he's not involved in the daily operations. It doesn't look like he his role of in 20% share is due to his providing financing, it looks like. So this is gonna be somebody who is not basically in the operations. And also Kalyani, I guess it is. I'm glad she's not here. She probably would be mad at me. But you know, anyone basically who's not involved in running a daily operation. So certainly she could be in there, although she's a family member, it might be a little more. But here's one of the reasons why this is because this is a non-family member, not a family member. So Vinjay, it's hard to say whether, I'm sure he's almost like a family member or whatever, but it's hard to say. So if you're looking at people who would be probably most interested in in those financial statements, is this person that's loaned them, is investing money in them and wants to see how they're actually doing, and that, his share of 20% is being represented basically, in the financial statements of what they actually are. So, but anyway, yeah, people inside the company, we generally are not writing it. So Suraj runs everything. So he is not going to be the one that's going to sue us. He makes the financial statement. So, you know, that's probably not okay. Let's stop here. Let's see, be back at 7-Eleven. I'm going to look at something real quick. I want to make sure we get to the financial statements. We might jump ahead to those a little bit. Okay, that won't be too bad. There's a few things here. We don't really want to get to the financial statement. Maybe we'll do the financial statements next, because I really want to get to those. Okay. Anyway, be back at 7-Eleven. Okay, tell you what, let's hold off on this for a second. Hey, why is that there? What is that? Oh. What I want us to do now is let's open up. There's one on there. There's a file for the Excel. It says financial statements. I should put that this is Excel. Well, the one that says financial statements. So these are the financial statements. This is what they handed us, and it'll be sort of like this. Did I send these to you guys, by the way? I can't remember if I sent that. Um,
Yeah, I didn't have it in my email.
it's not in there. Shoot.
Mm-mm.
Let me. What's occurred to me? It might be in Blackboard, but let me.
Oh, actually, I found it. It was at the top of the email. It just didn't download when I first downloaded it.
I'm gonna send it out again because I'm not sure.
Okay.
Doesn't hurt, right? Hopefully it is in here. Yeah, it's the last one in there. Okay. Let me jump back to. Okay, so these are the financial statements that they've given us. Now, the previous 2 years, these will have been audited. The current year will be unaudited. Right? So this is, so this is kind of the one that we're suspect. So we're whatever happened in the previous years, we're probably okay with these two. These have the stamp of approval. These are the unaudited ones. So these are the ones that we're looking at this year. Now, analytical procedures, something like 90, 95, 99% of fraud is found through analytical procedures. And that is we look for things that are unusual, things that maybe you wouldn't expect uh, between these the financial data. So we're kind of looking at to see those things that you kind of want to take a look at. And what things kind of looking at these financial statements, what things kind of jump out that, wow, that's kind of crazy, or whatever. Or I wouldn't expect that. Anything?
Maybe I was gonna say the income like kind of jumped, but
Yeah, certainly the income, yeah. That's quite a bit.
like I do see like before they were audited and then like their audited amounts are different, I guess. Like yeah, the 42 and then the 94.
Yeah, so these I'm gonna pull those. See them. Um, okay, so yeah, the income has really jumped up. And if we put that in a percentage, probably the easiest is to go by based on 100. Oh, that's not what I wanted. So the income is 225% of the previous year, or an increase of so this is the increase. Oop. It's not an increase. Sorry, I think it's so much Benadryl. Um, Whoopie. Yeah, by 8 o'clock, I'm going to be probably on the floor. Okay, so we have an increase in our income of. Oh, I see it got cut off. Don't do that. An increase of 125%, and that's very large. Okay, now let's kind of look up through the financial statements and see why. Why is that? Why is the income so large? The increase in the income. It's more than doubled. Why?
I'm not sure about that, but I noticed that the administrative expenses went up like significantly, but the finance cost didn't go up very much at all. Or like yeah, didn't go up very much at all.
Yeah. So the administrative expenses they went up by what, 56%? Yeah, and I don't think we're reading through there that they actually, I don't think they said that there was a bunch of extra people hired, did they? It didn't sound like, when I was reading through there, I didn't pick that up anyway. So that'd be an increase of 56%. Um, yeah, the finance cost went down. Now, that's a very good catch, and I'll show you why. I was going to combine these two, but what you said there is absolutely correct. Notice that the bank loans, are they going up or down? This is on the balance sheet, by the way. I just clicked on the balance sheet on the next page. So the bank loans are going up. The interest-bearing loan went down a little bit, but the indebtedness went up more than the. So they actually have more loans, and so you wouldn't expect that that would necessarily, be the same. It looks like that they're actually increasing their indebtedness, so you would think that the actual finance costs will go up too. That's a very good catch. Yeah, it went up by 1%, but you can tell that these are going up by more than 1%. Let's drop down 10. Well, it went down 10, but this went up about what, 15, so it's still about 5. I don't know. But it's still strange though that you'd have that going down. Oh, I see the current portion of the loan. It looks like they're paying off 10,000 at a time. Okay. And it may be that the interest rates went down a little bit or something. But it looks like it increased by about 5%, and it's still, but their finance costs went up by 1. The ones that are up here are the ones that are also very suspect, and the question is why. So this is looking at these two, the sales and the cost of goods sold. So these are the sales. Top one is the sale. I'll do this green. This is the sale. That's the sale. They increased by 39%. Cost of goods sold increased by 28%. Why is it strange that the sales are up by 39%? I'm going to jump back into no, not that. Until recently, DEFTA have been growing rapidly. However, the furniture industry is declining in the economy. Customers limiting their spending, competition, pressure to reduce prices to attract sales. Some furniture parts manufacturers are going out of business. And then we look at their financial statements. What's strange about that? By the way, that's not me barking. That's it's a little dog. So what's strange about this? If they're going into a declining sales and all that, why are their sales jumping up by 39%?
Were they cooking the books, fudging the numbers?
Well, that's our worry. Yeah. That would certainly be something we would look at, is why are the sales jumping up? And it's not just that, because they said that the margins are getting tighter, right? You had to, cut your price to get the more of the sales up. Well, let's go down here and we'll see what the margins are. The margins are increasing by more than the sales and more than the cost of goods sold. Cost of goods sold are actually not rising as much as so it doesn't look like the margins are decreasing like we have written up in our thing, at least not from what these financial statements are. Okay, now, is this evidence of fraud? Can we call the police? What do we, does this mean that these are fraudulent? What do you think? I mean, is it evidence that they have committed fraud? It actually isn't. It tells us where to look. It says, okay, look at this, in this case, look at the sales. Why are they going into a tight market where they have to cut the prices and they're getting slim margins and all this stuff? Look at the financial statement, it's completely the opposite. How is this information, this information isn't matching up. So analytical procedures are not usually, anyway, evidence of fraud. But what they do say is, look, you got to look at this. Here's an area that you need to look at. And one of them is going to be the sales. Is like, that is this really maybe is it the perception is it's a bad market. Maybe the expanding through the online stuff and all that is causing this to happen. It could be that there are real reasons why this is happening, but it doesn't really match up with what we are currently looking at. That the market's so bad, furniture companies going out of business and going bankrupt and blah blah blah, and yet you have, well, the places that are going out of business, you have them increasing their sales by 39%. So this is one of those things that analytical procedures don't necessarily tell you there's a fraud; they tell you where to look. So let's go to here. Okay, so let's look at some of the, so let's write some of this stuff down. Okay, as was mentioned before, the administrative expenses are jumping way up. So we'll make that number 1. You may have to do a little finagling on the. Okay, so that's number 1. Number 2, it was mentioned that no, wait, where am I at? Here we go. The finance costs have kind of stayed the same. Oh, don't do that. Even though the actual borrowing amounts have increased. They've increased by what 5% or probably something like that. I'll look at that later. But I guess we don't need to underline. I'm going to do something here. Administrative expenses of, we already did. Sales. Sales. I should put how much they've increased by 39%. Yeah, we shouldn't have 2 number 2s. We should have 3. And the margins are increasing by more than the sales or even the costs. So it's strange that they're saying the margins are lower when the margins are actually higher. Yeah. And again, none of these are evidence of fraud, but these are places that we have to look. Like I say, it could be that the internet sales are doing well. It could be that they're selling to neighboring communities is paying off. And maybe the closing of other stores, maybe that is increasing their opportunity in those other communities or whatever. But anyway, it tells us areas to look at, and that's what we do with uh, these analytical procedures. They are not evidence of fraud, but they tell you where to look. So this is where we will look for fraud. And again, we might not find any. It could just be, hey, they are doing better. These things that they're doing to try to change are paying off. Okay, let's go to the balance sheet. And let's look at this thing and see what. So again, I'm going to copy and paste. I'm going to teach you guys how to be lazy, just like me. So 2025, 2024, those have been audited. We were here last year. Last year we looked at these, and we came away with the warm fuzzies and thought that this was fine. Okay, so what looks unusual on the balance sheet? Something we might want to look at. What would cause you concern as an auditor? And again, we're only thinking about the financial statements. Are these financial statements accurate? So what numbers kind of jump out at you there?
I would say the bank indebtedness because it goes from 55 to 107, maybe.
Oh yeah, over the years, yeah, definitely.
Yeah.
And then and two, notice when it was 55, I'm going to add these together. Uh, where do I want to put that? I guess I'll do it over here. And you're right, though. This is strange. Give me 1 second. So this is the total amount of debt that we have that looks like it's probably charging interest. Actually, the current portion of the loan, we should probably put that in there too. It's the same, so it's not going to really have too much. Oops. Well, let's put it in just to make it complete. So let's call these interest paying debt. I need a T. Nope, not there. I don't need one. Okay, so this is interest paying debt. So it went up from a total of 155 to 203. And we look over here though, and if we look at all the years of the financing, it's not that different. I mean, it's 15 went up by what? Like 40% or no, not 40%, like 30 maybe. Even though these have jumped up by, oops. So it is kind of strange, the interest paying a debt, that it's going up and the finance costs are not. It would be interesting to see if any of this came from their investor. We don't have that information. Let's look up at the let's look up here at the assets. What's strange on the assets?
We can look at inventory and wonder why it went up so quick from 69 to 110.
Yep. Going to be lazy again. I'm actually going to copy 2 of these over. The 2 big numbers on here. Wait a minute, I gotta see how far I gotta put. Okay, well. The 2 numbers are really don't. Trade receivables and inventory were about 110 both. Trade receivables jumped up by 60% and inventories jumped up by 41. And again, this is supposed to be in a downturn, right? So inventories jumped up. They have more inventory now than they had before by a lot, 41%. Now, there is something about that is a little bit, I don't say comforting, but you'll notice that the cost of goods sold jumped up like 28% or something like that. So I don't do that. So it is possible that maybe, they're increasing the inventory because they're increasing their sales. So that might be an increase. What's the problem with these trade and other receivables? So these are like accounts receivable. What's the problem with your accounts receivable jumping up by 60%? By the way, if they jump up, does that mean people have paid or they haven't paid yet?
Means they haven't paid yet.
Yeah, the percentage of people who haven't paid has jumped up by 60%. What might be the fraud there? Going back to this one. It's possible that some of these sales are not really sales. Because notice, if you put in a fictitious sale, you say, oh man, our numbers are bad, we got to make this look better so that we get our bank loan or whatever. You put in a fictitious sale, your sales go up, but so do your accounts receivable. These go up too. Now, if they're fictitious, when do we collect them? Never. They just keep going up. So it's possible that this increase in trade receivables, which by the way is more than the sales increase by quite a bit. The sales increase was what, 39? Oops. and these went up by 60%. So it looks like more people are not paying, and the question is, are those really sales? You know, are they were they sales to real customers, or were they sales to customers that maybe couldn't pay? You know, so this is one of those things that you kind of wonder, is this going to be something we have to write down, or they should write down, I should say. Anything else here look too crazy? Equipment went up by 20,000. Big jump from these 2 years, but those are both audited, so we're going to say those are okay. Okay. So let's do from these. What are the concerns for the balance sheet? Well, I said before, the the bank indebtedness has gone up, but I'm just going to copy it from this one. Okay, number one. Inventories have gone up by 41%, and trade receivables, and this one indicates possibly fraudulent sales. You know, if these are made to either people who couldn't pay or to fictitious customers who will never pay, it's possible that this is part them cooking the book. So let's take a look here. So let's do the inventory first. Give me a second. Again, this is not necessarily proof of fraud, but we certainly want to look at it. And receivables increased by 60%. Maybe fictitious sales. And so again, these are analytical procedures. You'll look over these and you'll kind of see what the relationships are. It's kind of strange too. The cash went down. I'm not sure why that would be. Cash went down by 10,000. Could just be a timing thing, but anyway, so certainly these are going to be something that we're going to look at for those. And same thing over here for 14. Okay, let's jump back to our problem. Where are we at? Blah, 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 blah. Okay, let's look at this. Aryan, is it Aryan or Arjan? I'm not sure. Saying is a great deal maker. And I don't think he's a member of the family. Yeah, so he's persistent when negotiating with customers and usually get the sale. Although profit margins can be slim. Okay, so although we don't see that in the financial statements. What are the risks about Arjan Singh? And he bought a beautiful home overlooking the valley. Okay, that's kind of intriguing. What are we worried about for Arjan Singh? Anything? Well, it's possible that if the margins are slim, it's possible he might be dealing on his own. It's possible maybe he's dealing with kickbacks or something like that. Not saying that that is what's happening, but it could be. So there is the problem of slim margins. Although it doesn't look like they're too slim on the financial statements. All right. I'm going to pick and choose which one to use. What are the risks to a 30-day inventory on hand requirement? The risks are that the financial statements, that is a contract condition, and that it's possible if they don't have 30 days of inventory on hand that they are in violation of a contract. For example, let's say that they had 22 days of inventory. So we are careful to look at that because it might be that they are in violation of a contract. Yeah, I'll skip that one. So skip to number 7. Oops. I'm trying to wrap this up by 8. Some of these are more interesting than other ones. All right. Orders are filled. All orders over $500 with the sale price is below the minimum sale price must be approved by Arjan. It's a good control. Internet sales download, blah, blah, blah. Oh, hey, they answered our question. Each period, the number of bad debt seems to be growing. Lack credit checks and increasing bad debt means that sales may not be valid. That if they're making sales to people who cannot pay and counting them as sales, they'll never collect. Those aren't really sales. So number 8, say sales may not be valid. So, but it does explain though why we have that increasing in accounts receivable. Skip this one. Skip 9. Okay, this one's actually a kind of interesting one. Human resource and payroll. They hire competent people and employees are paid in cash at the beginning of each week. Okay, let's think about the US. Is that something that you do in the US?
No.
No. Yeah, so and reviews all payroll. They hand them an envelope with the cash. Company does not keep formal employee records. Okay, this is a cultural thing. They probably don't keep records because it's probably not required. And in the United States, well, in the United States, you go to jail for that, but because you had to have withholding and that for the government, and if you're not charging withholding, the government considers withholdings to be their taxes, and if you don't have them, that means you stole their revenue, and they don't like that. So anyway, this is a cash that is paid in cash, and they don't keep records. Okay, now there's all kinds of problems that could come from that. How much cash are they giving, and how much are they recording, and all that. Cash is one of those things that is really difficult to get around in an audit. Now, while this might seem like a crazy system, it probably has more to do with a developing economy rather than any necessarily control problems. They used to do this in the United States. When I worked at US Steel has vaults, like bank vaults, that are, the size of this basement. They're absolutely massive. And it isn't like they have one of those, they have several of those. And they have those because they would, people would show up for work. They would have a number, almost like a coin looking thing. They would be given, they go in, they do their job, they come out, they hand in the coin, and they would get $1.12 or whatever it was for back then, back then when you could buy a house for $300 or something. But anyway, they would it was all cash, and that's why they had these big vaults, and you had to pay them. If you didn't pay them, they weren't going to come back. So, you pay these people as they would leave the place. They would literally get paid every day when they left. So again, and that wasn't unusual. That was no one, that was just the way it was done. And yeah, so this is, I think, more of a, probably developing, just like the United States was developing. The United States was developing later on, and the same thing. Okay. Blah, blah, blah. Erratic profits. I'm going to skip those. Oh, here's where we're going to put in those last two. And then we're done. Yay. Okay, so this is for 14. And again, these are analytical procedures. And they are not proof of fraud. But what they are is they tell you where to look. And I'm going to do the same thing for 15. Okay, so let's turn that in. And we'll be done with chapter 11. But I think that's a good one. That's a good it's kind of it's fun, and it's also you kind of see that they're really working about family businesses. There really aren't that many controls. A, they don't have enough people, but B, they also generally don't need it. If you have people who are involved who look over all the transactions, owners, and the owners are definitely involved in the business, with the exception of Kalani and was it V something? Oops. I want to say VJ Singh, but he's a golfer. He's a great golfer, as a matter of fact. Vinjay. So Vinjay and Kalani, those two are not involved with it, but many of the other people are. So you get this that you have the owners in their greedy self-interest that they will be watching over the transactions and making sure that uh, those are done correctly. But you don't have the controls like you would see in a normal company, and I shouldn't say a normal company, a larger company, where they separate out, the buying, the purchasing, and acquiring inventory versus selling inventory and all that kind of stuff. Allowing for credit sales, those all happen independently in a large company because of the separation of duties. You don't have, and that's not an international problem. That's or work. That's U.S. problems too. One of one of the more important things that is different though is that they actually have to report to what the equivalent of, I guess, the IRS or the Revenue Service for Illinois on sales for sales tax. So they say, look, you're looking at the financial statements. You got to let us know if the sales tax are off by more than €1,000. Any questions? Okay, I gotta talk really fast because we're right at 8 o'clock and that will make it perfect. Okay, no questions. I'll talk to you guys. We'll do one more chapter. We'll do chapter 12, and that'll be it. And so the exam will be over 10, 11, and 12. All of these are kind of smaller ones, so it won't be that extensive of an exam. But yeah, any questions? Okay, see you guys.
See ya.
Bye, Professor.
Goodbye.
Hey, Professor, I got a quick question.
Yeah.
Actually, this is not really about the course, but I'm working under Inky Moon, who's who works in finance right now at Roosevelt.
Yeah.
And he was talking about how you used to have an accounting club at Roosevelt. Is that true?
I'm not sure. I know that they've been talking about having one. the problem with the accounting clubs is that they have to be kept up by the students.
Right.
And if you want to have an accounting club, I would gladly be a faculty advisor.
Okay.
We can't make them though, and that's the rules for the people who do our accreditation. They say, you can't control them.
Mhm.
But I strongly encourage it. Yes, I would definitely be a faculty advisor if we want to get people together, and I would definitely put it out there.
Yeah, it's awesome.
Yeah, yeah. Do you know other students who would like to, attend and all that kind of stuff?
Yeah, I am talking with a couple of them and they are interested, but I just want to see from like the teacher's perspective, like, because I feel like we haven't really got much like CPA practice or like options and courses from Roosevelt, and that's what we want, like a CPA course or like the accounting club to give us like help and resources. So we're
Absolutely.
like, yeah, definitely because I'm graduating in December, so I'm like looking into the how am I gonna start studying for a CPA, what I'm gonna do, and I feel like it's just so overwhelming without having like a course or something from Roosevelt.
And yeah, and I can tell you, when I went through, we did have an accounting club. Just because of I was in I was actually a graduate teaching assistant, so I wasn't
Mhm.
as involved in it, but it definitely helped lots of people. And that was actually how you
Right.
got into the CPA firms. That was how everything came out of that accounting club. So yes, I definitely would love to have that get started up, and also to try to put steps in to keep it going.
Yeah, definitely. Yeah, 100%. Especially I think moving to in person with a lot of stuff. I actually have you next semester for auditing.
Okay.
So I'm gonna be seeing you in person for that as well. I think that's gonna help. And also like I'm not sure how many students who are in accounting really want to do a CPA as well. I'd imagine it's the majority, but also like I'm saying it's hard to get resources and like talk about it.
Yeah, 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 and absolutely, it would, and I wouldn't even mind. I wouldn't mind attending and getting, trying to help get people lined up for it to talk about it. And yeah,
Okay,
uh,
perfect.
yeah, yeah. So um, let me. There's a process. Let me look into the process. Let me write that down.
Okay,
So
that's well done.
process for and I do think there'd be a lot of students for accounting club.
Definitely.
And two, while it is it's sad that we don't have one, but
Mm,
establishing one looks even better on a resume.
I guess so, yeah.
That yeah, we established I was whatever, establishing the
Mhm.
accounting club, and that would look even better. So yeah,
Definitely.
definitely.
How would we establish a club? Is that through the student government, or would that be a different process for that?
They actually had. I think there might be a form. Let me look,
Okay.
because there is again, it can't come from the faculty, but there is a form, and that you would get I think you have to have a faculty advisor. I would be happy to sign it,
Mhm.
and see if we can. And actually, the school should be um, keyed up for this, because this is one of the pushes that they actually had for us. Just in the meeting we had yesterday, Wednesday morning.
Oh, wow.
So I can definitely say, hey, we're taking you up on this, and we want to get this going, and how would they do it, and where would they be able to go to, and leave all the
Mhm.
stuff of the logistics up to you and the people that are going to be in the club. As far as when you're going to meet, are you going to meet, and when, and trying to get a kind of an agenda together so that we can have
Right.
meaningful meetings that on specific topics and specific things that people are interested
Mhm.
in. Absolutely.
Definitely. This is Inky Moon's like dissertation, I think, is to like get a CPA course program running through Roosevelt. Because I know at least DePaul has a course program, so you can like you can do accounting major at DePaul and you can get the CPA straight like that, like 140 credits, and you can just go.
Yeah.
And Roosevelt doesn't have that. I don't think UIC has that either, but stuff like that. So I'm
Well,
definitely gonna.
I used to teach a CPA review at the other school I was at.
Oh
So yeah,
wow.
Yeah, I taught the auditing, I taught the finance, no, the business, there's a business section, I taught that.
Mm-hmm.
I taught the taxes and regulation ones,
Tax regulation one. All
but,
right.
the auditing was one I always covered.
I'm kind of scared. I'm not scared, but like I'm just gonna study more for the financial reporting part of the CPA exam. I feel like that's gonna be the toughest one.
It is, it definitely is. And you know,
Mhm.
when I was going through, they actually had 5 parts. They had 5 4-hour parts,
Oh.
but 3 of those were for the finance, the financial, the FAR report, financial and
Mhm.
reporting, and that was, so we actually had 3 times the time that you guys have, and quite
Mhm.
honestly, the standards were easier back then.
Oh.
So now it's a big deal because they jammed, all these tough standards into a one test. Whereas
Mhm.
before they were spread out. So if you had like a real heavy duty topic that maybe you didn't score all the points on, it was only one, and you can still
Right.
pass that section. You know what I mean? If you take all the bad parts and you spread it over 3 sections,
Yeah.
you go, okay, well that's not, you still pass all these. But when they put all of them in one, it does tend to make it more difficult. I can tell you though, a lot
Definitely.
of people pass it. They
Yeah.
say 44% or something like that pass, even, and that's the hardest part. People pass the CPA exam every day. I mean, so it isn't that it's
Yeah.
impossible. It's just it is a lot of work, but yeah,
A lot of work, definitely.
you definitely
But yeah,
do it.
okay. Yes, I'm hoping for at least. But yeah, I also know for CPA, I don't need 140 credits anymore. I just can go with 120. So I think it's gonna open up for a lot more people as well. It's
Well,
exciting.
yeah. Well, here's the thing: you can actually sit for it with 120. You need to have the 150 to get the license.
Oh, I see.
Yeah, yeah, and but now here's what in the past they said you had to have 150 to sit for it.
Hmm.
The problem is people would graduate with the 150 and then from their master's program or just even taking extra classes. And by the way, if you have classes from a different school or anything like that, if you transfer anything in,
Hmm.
those also go towards that 150.
Okay.
And they could be in any kind of college. They could be in painting. If they're college level credits,
Well,
they count. Um, but anyway, the yeah, so you can actually sit for it basically with 120, and
mhm.
then and if you pass it, then and you could wait till you pass it before you go to your master's degree,
I guess.
because then I mean, then you're you're guaranteed, and again, you can even just take extra classes. It doesn't. You could go to a community college and take extra painting classes. It would count.
Right.
I wouldn't encourage you to do that, but but anyway, yeah. So you could definitely do it, but yeah, you can sit for the exam after 120 hours.
Okay. All right. Yeah, I know I've been talking with so many other people. I'm just between like working or going for a master's and all that stuff. But you know what? I think I'm just gonna stick with my plan for now. I'm just gonna work after my bachelor's, maybe come back for my master's afterwards. At least I can sit for the test, get my completion afterwards.
Exactly, and yeah,
Hmm.
and you could definitely wait until you pass it, and then say, okay, now I'm going to go back. And during that same period of time that you pass it, you'll be getting work experience more than likely, and you could put it
Definitely.
on your resume. That look, hey, I passed the CPA exam. I'm not a CPA yet, but I've passed the CPA exam, and I just need to finish up with my hours,
Yeah.
basically.
I've also heard some people say that the CPA it helps them with work experience as well. Would you say it was the same for you like that?
Yeah, definitely. It opens the doors up, and yeah. So you definitely, and I think in Illinois, I'm not positive, but I want to look at it again. But they,
Mhm.
depending on what you going in, where you go into, if you go into auditing, it would definitely it counts. I think you get it quicker, basically.
Right.
Instead of having 2 years or whatever, it's 1 year. So yeah, uh,
Okay.
yeah, and it's not a bad idea what you're talking about doing. You get the bachelor's, sit, pass the exam, and
Hmm.
then get your master's degree. It's kind of difficult to get your master's degree and study for the CPA exam at the same time.
Right. I'm sure it is.
So,
Definitely.
but with the CPA exam, if it's your goal, not the master's, so per se, sit and take the CPA exam. You'll get you get the right to sit basically, and you can
Okay.
sit for the exam and do the parts and pass it. Well, once you pass it, then get your master's.
Yeah, I think the reason I came to Roosevelt was for a forensic accounting master's program. That just sounds so cool.
Yeah, yeah.
And Inky actually has the CFE as well, like for a CPFE or something, I think, for like forensic accounting. So I think it's really cool.
Yeah, the CFE exam. I actually was a
Mhm.
certified fraud examiner.
Oh, wow.
I, I
That's
let that
awesome.
I let that designation go. I used to have a bunch. They kept. I had to do these um, continuing education credits, and they were just so boring. I said, well, it counts if you pass if you get a designation, they count it. So I said,
Oh,
I'd rather just do the designations, and then I'll get the designation, and I'll get out of going to these continuing education classes. It isn't that they're boring, but you remember that me and people around me, we all teach. So a lot of the stuff that they're going through, we already taught it in the class.
you already know. Yeah, of
Okay,
course.
here's how you do for depreciation. We go, yeah,
Like, yeah, you know that.
right. So well, for other people in the class, it's probably interesting. Maybe something they don't see very often or haven't seen for years.
Mhm.
For us, it was kind of tough, so
I
yeah.
see. Okay, well, I'll definitely let Inky know that you're down. You're like excited for this program as well, because
Yeah,
he's very passionate about it, and I'm passionate for him as well. I've been
okay,
telling I'll help him like talk with students who are in accounting, see what like
absolutely.
their head is at, how they're feeling about it. But yeah, great to have your support as well.
Well, definitely, and I do teach the the intro classes and all that, so I can do the recruiting in there too.
Oh, awesome! Yes, get them in here. I think,
Yep,
and honestly, I think they all would want to be. Like, I know we have an investment club, but that's more like the finance side. It's not really
right,
CPA or accounting focused.
right. Yep.
Mhm.
Yeah, and that's going pretty well. Yeah, I was just talking to the faculty advisor for that. I can't. I
Mhm.
keep flaking on his name. I flake on everybody's name, but
Honestly,
but yeah, I was talking to him, and it was going very well.
awesome.
So, yeah.
Okay. Well, then it was great talking to you. I'll let you know, keep you updated with what's going on with that,
Okay, well,
and
very
I'll let
good.
Inky know.
All right, thank you.
All right. Have a good evening.
Okay.